What's up guys, Dr. Ryan here with another episode of Smashing Wealth. In this video, I'm going to be going over how to invest in oil. I'm going to be covering the risks involved in adding exposure to oil as an investment in your portfolio. We're going to be discussing the positives and the negatives of each type of investment vehicle in detail. I'll be covering how to invest in oil indirectly through buying exchange-traded funds, investing in mutual funds, and buying specific oil companies. I'm also going to take it a step further and dive in deeper into some advanced investment strategies which include but are not limited to utilizing future contracts, joining MLPs, and investing in direct participation programs. I'll be breaking down a relatively difficult topic into a very easy to understand video. By the end of this video, it is my goal to drastically increase your working knowledge on how to invest in oil. This will help you in your quest to make your own informed decision on the best way to go about investing in oil. This will ultimately help you earn more money through your oil investments. If you stick around to the end of this video, I'm going to be sharing with you the single biggest misconception concerning investing your money into oil. This way you won't be fooled by it. So let's get into it right after this disclaimer. I have a quick disclaimer for you. I am not a financial professional. This video is not financial, tax, or investment advice. Please do your own due diligence and consult a licensed financial professional before investing in anything whatsoever. This video is for entertainment purposes only. Oil is a fundamental commodity that allows our economy to operate. That's why it is certainly no surprise that you're looking for a way on how to invest in oil. What do you imagine when you think about how to invest in oil wells? You may imagine standing under the hot Texas sun, closely watching as oil is being pumped out of the earth. This is literally liquid gold being pulled out of the ground. You may have a big smile on your face as you think about your wealth rising higher and higher. Bright thoughts of your future go racing through your head. Your investment has paid off big time. It's time to snap back into reality and understand that this isn't the only way to invest in oil. There are several ways to invest in the oil industry today. As one of the most traded commodities in the world today, oil is one of the primary forces that moves economies on a global scale. Oil is a major driving force in the economy. There's a reason why we call it black gold. Our cars, our factories, our industries, they're all heavily dependent on oil. It's a finite resource that has helped shape multiple facets of our everyday life. This begs the question, if it's that important, why not invest into it? Let's take a look and break down several different ways on how to invest in oil and gas. As you know, oil comes from the ground. We drill deep into the earth in search of oil. Oil drilling is a major industry and it helps employ thousands of people. You can invest in the drilling of oil wells by investing in master limited partnerships. This is also known as an MLP. MLPs also typically own the pipelines that carry oil from one place to another. They have a great dividend payment. MLPs are super interesting. They share similar characteristics as stocks in the fact that they are publicly traded. They have liquidity on the market so that you're able to buy and sell them. This means that you can buy and sell them on public exchanges similar to regular stocks. This means you can easily purchase them. The big difference lies in the business structure and the tax benefits. MLPs are set up as a partnership business structure. This essentially means that by investing into it, you effectively become a partner in the MLP. You don't have to become an active partner if you don't want to be. There are some key tax benefits associated with being a partner in an MLP. You may receive distributions from the MLP. This is cash flow resulting from the profits of the MLP. You would pay taxes on this distribution income. Unlike oil commodities, MLPs don't move much in value. They're usually much more stable investments. The issue with MLPs is that it's subjected to market risk, and they suffer when there's a low energy demand. Investing in oil can be a whole lot of work, depending on the strategy that you use. Oil ETFs do the hard work, so you don't have to. Let's break down how to invest in oil ETF. An oil ETF is an oil exchange-traded fund. These are perfect if you're a passive investor and you don't have the time to research hours and hours every single day. These exchange-traded funds are more closely related to the price of the actual oil commodity. Since a commodity like oil has high volatility, oil exchange-traded funds can also have increased volatility. There are multiple advantages to investing in an oil ETF compared to other financial investments. What's really great about an oil ETF is the fact that you could invest as much or as little as you want. Trading oil ETFs is really easy to use as you could take advantage of a lot of the same order types that you could utilize with stocks. This is a great feature of using oil ETFs as part of your strategy on how to invest in oil companies. This includes using limit orders to buy or sell oil ETFs when they drop or rise to a certain price point. You can use stop loss orders to sell off your position if your oil ETF starts to rapidly drop in price in reaction to a news story. The fees are also lower for oil ETFs than a lot of the other financial investments used to invest in oil. The one negative aspect of an ETF is the fact that you have no control over whatsoever what assets are held inside the exchange-traded fund. Another popular oil investment are mutual funds. A mutual fund allows you to buy a whole bunch of investments packaged into one purchase. An oil and gas mutual fund can combine multiple companies from the oil and energy sector. This provides a diversified investment portfolio, which tends to be less risky than picking individual stocks. This investment portfolio is managed by an expert fund manager. These tend to cost more than an exchange-traded fund. This is usually a safer choice for a newer investor as your investments is diversified across many different companies. This is how to invest in oil for beginners. An example of an oil and energy mutual fund will be Fidelity Select Energy Portfolio, which goes by the ticker FSENX. So, you want to buy oil? Just go ahead and buy the oil. You can actually just buy oil. This presents some issues though. Where are you going to store it? Your garage? Your basement? Yeah, that's a pretty bad idea. You might even start a fire that might take multiple fire stations to put out. This is not how to invest in oil. It isn't even cheap to store oil. It's quite expensive. I highly recommend against doing this. What I do highly recommend, on the other hand, is taking a moment out and smashing that like button for the YouTube algorithm. There are ways of owning oil directly, and one of them is buying oil future contracts, or by buying oil options. Let's get into how to invest in oil futures. You buy oil future contracts from a commodities broker. Trading oil futures is considered one of the most direct ways of trading oil without actually trading barrels of oil. Individuals who trade oil futures typically follow two oil benchmarks. These are known as WTI, which stands for West Texas Intermediate, and Brent. These oil benchmarks track the price per barrel of oil. Oil future contracts are just contracts that specify specific terms on buying crude oil between a seller and the ultimate buyer. These terms on the contract specifies the quantity of crude oil that must be sold at a specific predetermined price at a future delivery date. The buyer of this contract is agreeing to accept delivery of the crude oil in accordance with the terms on the futures contract. Now let me break it down and give you an example. So let's say you have a futures contract, and this futures contract specifies that 1,000 barrels of crude oil will be sold at $22 a barrel, and it will be delivered on August 12th. You can trade these contracts and profit from them in certain situations. For instance, if you bought a contract which priced 1,000 barrels of oil at $22 each, and the price of oil goes up to $30 a barrel, you could turn around and sell that futures contract for a profit. This is how to invest in oil futures. If you want to have direct exposure to oil as a commodity, venturing into the oil's future market is one way to do it. Your investment will be directly tied to the price of the oil commodity itself. If there are big price changes in the price of oil, there'll be big price changes in the value of your investment in oil futures. This is not how to invest in oil with little money. This is almost as exposed as your investment can possibly get. This is definitely an area I would limit my investment to what I can afford losing. Buying oil options and oil futures falls deep into the category of expert and professional investors and traders. This is a field that you must thoroughly study before venturing into. Studying is an important step in learning how to invest in oil commodities. This is because these investments are extremely risky if you don't have a strong background or knowledge in options and the futures market. In addition, it can be more costly to buy futures contracts as most brokerages charge you per contract when it comes to option trades and futures contracts. You can be highly leveraged in your positions, which can lead to extreme gains and extreme losses. Futures are actively traded, so they're very liquid. One of the best things you can do for your future is smashing that like button for the YouTube algorithm. The other issue with trading oil futures is that you need to specifically use a brokerage that offers futures trading. You also need to know what you're doing, or you might find yourself with hundreds of barrels of oil at your front door, which could be one of the worst things that could happen when you're learning how to invest in oil futures. Have you ever thought about trading oil futures? Let me know in the comment section below this video. If you want to get your hands dirty in oil investing, you should consider investing in a direct participation program. This is also known as a DPP. This kind of setup is created for investors who want to invest directly in oil and gas production and exploration. As an investor in a DPP, you're entitled to tremendous tax advantages. In addition, if the DPP is generating cash flow, you'll be entitled to some of the cash flow as well. You directly own a percentage of the assets in the operating company. This is commonly referred to as working interest. The advantages of a direct participation program is that you don't have to be an expert to get involved. You don't have to run or set up the company. Despite this, you own a portion of an oil company in this kind of business structure. This is how to invest in oil long term. As you may be suspecting, direct participation programs can be associated with substantial risks. You must ensure that you do a tremendous amount of due diligence prior to getting involved with a direct participation program. You will be liable as a part owner for any costs that arise from any projects that the DPP is involved with. This is not how to invest in oil for beginners. There are a few different types of direct participation companies. One of them is an exploratory drilling program. This is a program that's targeted to going around exploring for a new area to drill for oil wells. If this venture finds oil, you can make a ton of money. This is how to invest in oil fields. If you find nothing, you can lose your entire initial investment. This is a very high-risk program that can result in very high-risk reward. This is one way on how to invest in oil wells. The other type of DPP is a development drilling program. This is a program that focuses primarily on areas that have wells that have already produced oil, and this is the most common program that the DPP can take part of. This is another way on how to invest in oil wells. The most simple indirect investment you can make in oil and gas is to buy shares of a company through investing in the stock, through the public stock exchange. This is how to invest in oil stock. Two of the biggest companies are Chevron and ExxonMobil. The ticker symbol for Chevron is CVX, and the ticker symbol for ExxonMobil is XOM. Personally, I love investing in oil. I mean, oil, like America is built on oil. Like when I think of oil, I think of industry. I think of the Industrial Revolution. I think about the movement that's gotten America to where it is today. And that is powerful. So it is powerful owning a piece of America through oil. I found that one of the best ways on how to invest in oil companies was to choose the bigger ones because they're less likely to go out of business during a bad recession. As the cost of oil changes, so does the value of these companies. The change in price is not always directly correlated though. These are dividend-paying stocks. This means that the company pays out a percentage of its revenue to you as a shareholder. Historically, oil companies have strong dividends, and they have a long history of paying them out. They can be a strong source of cash flow for you. This is how to invest in oil companies to create dividend income. Once again, this video is not investing or financial advice. You must do your own due diligence prior to investing in anything, and you do so at your own risk. The benefits of buying an oil company is that you could take your pick of when you want to buy, when you want to sell. This is one of the big advantages of how to invest in oil and gas stocks. You can easily buy stocks like these on your phone using an app like Robinhood and WeBull. I left a link in the description section of this video for you to download and sign up for Robinhood. You will get a free stock just for opening an account. I also left a sign-up link for WeBull in the description below. Just for depositing $100, you can get 2 free stocks, with one of them being valued up to $1,400. You could turn around and just go ahead and sell your free stocks. Then you'll have money to go out and potentially buy some oil stocks. This is how to invest in oil with little money. I found that if you're going to buy and sell constantly, WeBull would probably be the better platform for you. I use both Robinhood and WeBull, so if you have any questions, feel free to drop them in the comments section below, and I'll be happy to help you out. Let's go over some of the issues of buying individual stocks. One issue with buying individual stocks is that they're more volatile than a diversified exchange-traded fund. Another negative buying big oil companies directly is the fact that many big oil companies do their own refining, which doesn't really benefit from higher oil prices. This means that even if the oil price goes up super high, there won't be a proportional increase in the price of a big stock. This is one of the investing issues when it comes to how to invest in crude oil stock. The fact that you made it this far in the video means you support the channel, and I want to thank you for that. If you found this video helpful so far, please consider smashing that subscribe button and turning on the notification bell to be alerted when I release future videos. Gently smash the like button as well, and drop any comment in the comment section below. Doing this really helps the channel grow as it boosts the YouTube algorithm, which results in this video being pushed out to more people. As a result, it helps me put out more content. It also only takes you a second, and it helps me out tremendously. Thank you for your help and support. Now let's get into the good stuff. It's time to talk about one of the biggest misconceptions in the oil market. The largest oil ETF is USO. USO stands for the United States Oil Fund. A lot of investors invest in USO for all the wrong reasons. It's also part of the biggest area of confusion in how to invest in crude oil. Some investors are under the misconception that by buying USO, they're investing in the spot price for oil. The spot price is also known as the cash price. That's the price of 1 barrel of oil. This simply isn't true, and it's never been the case. The spot pricing of oil and the price per share of USO, they're very much correlated, but they're definitely not equivalent. Let me break down for you how the United States Oil Fund, or USO, works and functions. USO is a fund that tracks the front month's oil futures contract. The term front month refers to the spot month. So if front month means spot month, what does spot month mean? Spot month is a term that refers to the nearest expiration date for a futures contract. As you get closer to a futures contract's expiration date, you'll notice that the difference between the futures price and the actual price per barrel becomes less and less. The futures contract that the USO is tracking does not usually equal the cash price of oil per barrel. USO holds the current futures contract and waits until it's 2 weeks away from that contract expiring, and then it goes ahead and it buys the next future contract for the following month. Most times, the pricing of the futures contract costs more than the front month's contract. And that's because the futures contract representing the next month represents the purchase of oil that's currently being stored, and storage costs money. So if you think about this for a second, you'll realize that if you invest in USO, you buy it at the front month's price, and then the pricing of the futures contract for the month after usually costs more, which then gets purchased by USO. So you end up losing money by holding USO long term. So to sum it up, if you didn't understand anything I just said, in my opinion, USO should not be used as a long-term hold investment for the purposes of investing in oil long term. It is not the best solution if you're looking at how to invest in oil long term. I have a disclaimer for you. I am not a financial professional, and nothing in this video is financial or investment advice. Do your own due diligence before buying or selling any investments. Always remember that while investing, you can lose your entire investment. When you're looking at how to invest in oil and gas stocks, you have to take into account market forces. The primary market forces that you must pay attention to is supply and demand. You have to take into account how much oil is being introduced in the market during any time period, and then look at the consumption of oil in the market. If there's an oversupply of oil, the oil price will fall. If there's a decrease in demand of oil, the price of oil price will go down as well. When the supply is down and the demand is up, that's when you start to see an increase in the price of oil. If you've invested in oil, an increasing price per barrel will usually translate to an increase in your profits. Do you think that oil prices will be going up or down in the near future? Drop a comment saying up if you think that oil prices will be going up, and drop a comment saying down if you think that oil prices will be going down. If you drop a comment down below, I will respond to you. Let's have a conversation in the comment section. There are many advantages to investing in oil and gas. If you have decided to invest in a well and it's producing cash flow, you may be entitled to a depreciation allowance. There are many tax breaks on passive income derived from some oil and gas investments that you should definitely speak to your licensed CPA about. Tax advantages is a major reason smart investors are always looking for ways on how to invest in oil and gas. Oftentimes, oil is seen as a hedge against inflation, which can be a strong source of cash flow, which can pay you passively for years into the future. There are also many disadvantages to investing in oil and gas. The price of oil is all over the place. Its volatility is unmatched. This is a big issue when it comes to how to invest in oil and gas stocks. Not only that, but since it's a global economy, its price can be heavily influenced by other countries. This has happened time and time again throughout history. Company profits can be affected by accidents. There have been companies in the past who were involved in oil spills, which has led to extremely expensive cleanup efforts. This can adversely affect your investment. Question of the day: which type of oil and gas investment have you invested in or will become invested in? Drop a comment down below in the comment section of this video and let me know. If you made it this far in the video, please consider smashing that subscribe button and turning on the notification bell to be alerted when I release future videos. I highly recommend joining our mailing list by going to Smashing Wealth real.com. This way you'll be one of the first to know when I release new videos in the future. I left the link to join our mailing list in the description box below. Obliterate that like button if you're feeling generous. Feel free to share this video if you felt this video helped you learn how to invest in oil and gas. You can also hit the save button to bookmark this video and come back to this video later. Feel free to follow me on Instagram and Twitter at RealDrRyan. Don't forget to claim up to 3 stocks for free from the links in the description below. That's free money in your pocket. Let me know which free stocks you get in the comment section below. I hope you enjoyed this video on how to invest in oil. This is Dr. Ryan. Until next time, have a smashing day.